Hey guys, what's going on? Tyler Turner, your Texas neighborhood realtor. I'm here to talk about in this short video the different strategies for investment opportunities when it comes to real estate and then when it comes to the stock market. So when you do real estate, you're purchasing a tangible physical land or property, and that's broken down into residential and commercial. And then when you're looking at the stock market, you're buying a share of the company, which is a fractional ownership or even dividend return that you'll receive from appreciation of that company and their growth over time. And so one thing that you can look for investment strategies, you have to understand there's different social events, different geopolitical events, and then even we're walking into an election year. And so I think the Texas real estate market and the stock market will both have their differing volatility that correlates with that. All right, guys. So those that do know me, I really got into investments and really got into economics and finance through the stock market early on, especially when I was in college. And so when you think about stocks and the illiquidity behind those assets, it's easier to buy and sell shares than it is to buy and sell real estate, right? You can borrow against both investments, but it's easier to borrow against stocks and the volatility and then even the dividends that they pay. One thing is that when you consider the S&P 500, which is just the top 500 shares in the U.S. economy, the average return has been 10% over a year since inception, right? So if you were to invest $1,000 in the S&P today, over 20 years, you have around $6,000. Doesn't seem that extreme, but you can see that gradually continues to grow over time. Now, when thinking about cash flow, stocks have management costs, they have time and effort, volatility, liquidity, diversification, and then easy access. Those are things that differ from the real estate market in their own right.
So looking at the S&P 500, which is most likely the safest return when you're looking at the stock market, you're looking at a year-to-date return of 18%, a one-year return of around 10%, and then a five-year return of around 11%. And historically, you'll see dramatic drawbacks and then dramatic increases in the market, debating on what's going on in that time period and what economic forces are moving. You'll see quite a few bull runs. We just had a down year recently in 22. And so as you can see this chart, we're looking for green.
So going to real estate, right? And so I think when you really think about coming out of the 2009 crisis, especially into today, we've seen dramatic increases in appreciation for actual houses and what they're being appraised at now. One thing is for certain is that there can always be another company that goes public, but people will also always need a place to live. And so you must have a residence of your own. And then even for homeowners that are looking to rent homes out, especially with VRBO and Airbnb and new companies that are starting to come up, rental investment in real estate is a huge opportunity, and it's less volatile to the stock market. Some differences that real estate has comparison to the stock market, though, are ongoing maintenance costs, which isn't always favorable. They have a diligent oversight in regular interactions, with your tenant or even you with the landowner who you're renting from. There's price fluctuations that happen with geopolitical and social events, and then even inflation. And then also interest rates. Right now, interest rates are 6%. Historically, they were 2%, which was of the lowest that we've had. Money is tied up for a few properties, and then also it takes at least most likely about a month to sell a property. When in the stock market, you can get it out virtually within the trading day.
So looking at the Texas housing market predictions for 2024, annually, year over year, we're looking at a home appreciation around 5%, considering the economic environment that we're currently in. The Texas housing market has been through various shifts, and interest rates being 6% right now when they were previously 2% is definitely not helping. There's a slight decline in appreciation value of less than 0.5% for homes, but it's still relatively stable across the board. And so when you look at the median home value of around $300,000 in Texas, and then a percent of sales over list price, about 25% of those houses are selling over. Yet another resource for Texas appreciation rates. You'll see over the course of 10 years, about an 8% return. Not bad.
So when considering the Case-Shiller Home Price Index, it is seen that stocks do outperform residential property investments over the course of time. However, one thing that I really would take into account is that I have personally, as I'm looking for my next rental investment for a home that I'm trying to purchase to rent out, is that one thing is that you always will need a place to live, and that although there's month-to-month maintenance costs with owning a house, it is something that I can control, and I can be cognizant of the area I buy in that is developing. I can be cognizant of the maintenance that I have on the house to drive up its its value and price. But when it comes to the stock market, especially companies that you invest in, sure, you can sell, but you do not have a direct line of sight into how that company is managed and the direction that that company is trying to go. So I do, in all, think both opportunities are great investment strategies. And I think that you should pursue both if you have the opportunity. I know 401ks are wrapped up in the market, and then your residence is wrapped up in homes. And so I think both are a great opportunity for you to parallel path. If y'all are in Texas, you know where to find me. We'll have another video coming out next week. I'll see you guys next time. Peace.